we've got a new report actually out from Bain Company saying China's luxury sales plunged by as much as 20% last year, bringing the market back to 2020 levels. The report says the fourth quarter showed only a slight improvement on the back of Beijing's stimulus promises. Weiwei Xing is a partner at Bain and joins us now for more on this. So, I mean, is this sort of any surprise that we're seeing this slowdown? We had all the signals really all year coming through from different luxury names that things weren't looking too good in China.
Yes, exactly. So I think, before we talk about last year, we really got to put things into context, right? If you look at between 2018 and 2021, the market nearly tripled. That's astonishing growth. Of course, we know what happened in 2022. 2023 was a year of recovery, and then 2024 has really been the first year with real substantial decline. As you rightly pointed out, quarter over quarter, things sort of got a little bit progressively worse, with Q3 being really the worst of it. And then, of course, in Q4, with the stimulus announcements, we are starting to see signs of the market doing a little bit better.
Well, are there specific product categories that did certainly worse than others?
Yeah, I mean, first, all the categories were affected, but some fared better than others. So on the more positive side, beauty had a single-digit decline and did relatively well. And that's because, in sort of tough economic times, consumers are looking for these small luxury purchases, and they're looking for sensorial experiences. So as a result, fragrances and color and ultra-premium skincare has also done very well. But on the other spectrum, jewelry and watches have really taken the biggest hit. In a way, they are the ones that historically, compared to the other categories, have performed a little bit worse as well.
What else sort of stood out was also that a lot of the spending that is happening, because Asia Pacific didn't do too badly, and it's really one place, and that's Japan, and it's the weak yen. Do we need to sort of think about it doesn't really matter. It's agnostic to country. It's more about Chinese consumers, and they are still spending, but just maybe not in their home stores.
You're exactly right. Actually, when we think about sort of mainland China luxury consumption, we got to put it into the context of the Chinese cohort. During the COVID years, the border was closed, right? So the vast majority of luxury consumption happened within China. Actually, at the peak of it, 95% happened within China. Versus last year in 2024, we estimate about 40% actually happened abroad. So that is actually one of the key reasons why we're seeing the market take a hit as well. And as you rightly pointed out, the travel to Asia Pacific and luxury consumption to Asia Pacific has recovered to 120% of the 2019 level. So indeed, people are going to places like Japan, Southeast Asia to make their luxury purchases.
This might be anecdotal, but I'm wondering, are price levels in Japan, because of the exchange rate, actually cheaper? In other words, what is that arbitrage trade, if that makes sense?
It's very sizable. Okay. And for the consumers that are price sensitive, it is very attractive. We did a snippet, a spot check of different, popular products.
Yep.
And we saw price gaps as large as 30%.
Wow,
in different categories.
So how does that play then into grey market activity as well?
Yes. So gray market has always been there. They get a little bit bigger or smaller depending on the time. Of course, the price gap between Japan and China and other markets, they are contributing to the gray markets, but that tends to be individual or small-scale daigous, as we call it.
Yep.
The real big sort of business-like scale daigous, we believe the sources of the products are actually coming from the wholesale channels in other places, and not necessarily due to the currency fluctuations.
What about other places where traditionally you did see a lot of the luxury purchases, for example, Hong Kong? And if you could also compare, Europe is also a good example.
Yes, of course. So in Europe, we're seeing the level to have recovered to about 65%. That's compared to last year,
that's
about
not a lot,
40%.
Okay.
Yes, I mean, there are still, overall, people are definitely showing more of a preference to travel to Asia Pacific, somewhere nearby, as opposed to Europe. So that is affecting it. Hong Kong has been mixed, right? Hong Kong has been soft. The good news is we're seeing the tourists coming back. You very much see them on the street, but perhaps the profile of the tourists and their purchasing behaviors have evolved a bit since before 2019. They're more here for the experience, for maybe taking photos, and not necessarily translating completely into luxury purchases.
Yeah, I was actually going to ask you, how much of this is obviously economic in nature, and how much of that is just a shift in consumer behaviors, and how much of it is also generational too?
Yeah. I guess, some of it is the mix, the profile of tourists that are coming here are a little bit different. We're getting sort of the GBA ones that are coming in groups, and we're, of course, getting a lot of young people that are coming here, like I said, more for the experience, right, for the photos and so on and so forth. Yeah. So as a result, it really hasn't completely translated into purchases. Okay. We do have a segment of Chinese, I guess, affluent immigrants that are now living in Hong Kong. But what we see is many of those relationships with their sales associates are still in mainland China. So it will take some time before the effect of that is seen.
So what's your outlook then for this year? Do you see any sort of improvement? And which brands are standing out to you? I mean, a lot of people will say Hermes, for instance, is better at withstanding it than a lot of others. But anything there's to note?
Yeah, many of the brands did not do so well this last year, but you're absolutely right. There has been bright spots, right? And it's not necessarily the biggest brand. Scale is not really the only indicator, if you will. There were a few smaller brands because they truly have been able to create that connection with the consumer and have a very distinct value proposition. They've fared well as well. So, outlook for this year, I guess we're cautiously optimistic. We think 2025 will probably end flattish. First half will still be challenging. January was not great. But as the more stimulus come into play and to stimulate overall consumption, luxury will be no exception. So we believe second half will be a little bit better. So ending the year on a flattish note.
Yeah, a lot of the issues, to your point, right, are outside the control, really, of both consumers and sort of the companies themselves. Within the control of companies, what advice would you give right now to luxury names, for example? How do they engage with their clientele?
Absolutely. It's a time to go back to the fundamentals, right? If you think about what has driven growth in the last few years, it was really rapid store footprint expansion, price increases. Those things won't necessarily hold in this new era. Now it's going to be much more about coming back to the roots of the brand, right? What do you really stand for? Are you distinct? Do you have a clear point of view? And are you able to really offer the products and the assortment that fit the lifestyle and the desire of this new generation of consumers? So that will be the key. And we certainly believe there's still huge opportunities to be unlocked, and the brands that are able to do that will perform well.